Hey Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that sideways action on the Bitcoin and crypto charts. Guys, the Federal Reserve did step in and they did just move as expected, okay? So they really didn't change the game for the markets. And as you can see, as a result of that, we're just getting this kind of sideways action, as I mentioned. Now, that suggests that there's going to be other economic factors. There's going to be other things in the market which end up determining if we've kind of maxed out here or if, we're going to get some type of a giga pump, whether or not Bitcoin is seen as some type of alternative to the instability in the financial markets, or whether Bitcoin is just going to continue to be traded as a risk on kind of tech sector stock almost, right? In which case it would dump with the rest of the stock market should stocks take a tumble. Now, should stocks pop up because they prefer the stability that there's the possibility that the Fed may not be increasing interest rates again, then it could also be a beneficiary of that type of stability that the Fed is kind of offering in the suggestion, the kind of hint that we got that the Fed may be done increasing interest rates. Now, the bulls really didn't get what they wanted, which was to hear that the Fed may be considering to reverse policy and kind of pivot and pull back on some of their harsh interest rates. And, there's a lot of good reasons for that. Inflation is still running pretty wild. And so the Fed wants to keep that rate just at least consistent, even if it doesn't increase again. And so there is some type of ambiguity still up in the air regarding these things. And so we're seeing that indecision in the markets. But overall, if markets have a chance to pop, it is going to be within this month, I believe. At the end of the month, the government is essentially going to be running out of, workable money, and that's just a function of the debt limit ceiling that's in place, and which Congress needs to negotiate with the president to lift it in order to pay our current debts in the United States. Now, usually when that moment happens, of course, the United States always does the right thing. It always pays its bills, but it can create a little bit of shakiness in the market, and the markets can get slapped down pretty hard. Now, that time is going to be in early June, perhaps very late May. And so, expect some type of volatility, most likely to the downside overall in markets, not, talking about Bitcoin specifically or any stock specifically, but overall in the market to the downside come June. So that suggests to me that if Bitcoin has its chance to really pop and break a couple levels, it has to happen during May. Now, guys, currently we are pretty well situated for that possibility. Let's go ahead and just take a look at where we are on the Bollinger Bands. As of today on the 6 hour, you can see that we are sitting pretty on top of the Bollinger Band midline there. We were running into a bit of resistance when we got knocked down the other day and kind of had to reset and try again. But what I mentioned to you was that we were putting in a little bit of this W formation, and we did. We ended up putting in that W formation, and we ended up popping up right to where I suggested we might pop up to, that kind of 29K area, and then we got slapped back down again, which I also suggested was possible because of this diagonal that we have on the charts here that just keeps slapping us down time after time after time after time after time, and then once again after time. And so this diagonal, really has just been aggressive, and currently we're challenging it in a stronger fashion, in my opinion, than we have before. If we look closely, I have drawn in two lines of it's hidden bullish divergence, but we're starting to build up these bullish divergences. And hidden bullish isn't the strongest, but it does count in the additive, and so the chart is really trying to build in some strength here. And these blocks that I've put in the background are the general regions that we've kind of been fighting in between. So you can see that we kind of flipped this area, popped up to this area, got rejected, held on to the top of that box, popped up to the next box, kind of chopped inside of it, bumped our head here, got kicked all the way back down to the start again, fought our way back up, just ping-ponged between these boxes here. And you can see we made all the way up. We made it all the way up to the top box where we, barely held on to the bottom of it. Tried to poke the top of it, got slapped down pretty hard, tried to hold on to the bottom again, and that's basically when all the trouble started, because it just sent us back almost to the beginning, right? Almost to the beginning of this little area. And you could say, well, they're grabbing all the liquidity here. Everyone has their stop losses, right? So let's just think about this, the psychology of the market. Everyone has their stop losses as this price is rising, and so they've liquidated everybody. And you can say, okay, great. Now is the time that we can just push up, because there's no more stop losses down here. We can just push up and just go for it. But something else is happening in the market. Okay, so we did try to get that push, and this is where I suggested that, oh look, we may have this type of cup and handle right here that could potentially take us up to that 32 area. But for some reason, the market just got jittery ahead of the Fed meeting, and we just got sent all the way back down, where we did have this supply line, or pardon me, demand line, which did make a higher low and a higher low, and again a higher low, and again, a little bit of a higher low here, a little bit of a higher low here. So, in the aggregate, we have a low here, higher low, higher low, higher low, higher low, higher low. That's bullish, 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 bullish. Okay, guys, and so even though we basically bumped our head into some pretty tough resistance, and this whole area up here has been just a tough nut to crack, we are overall, stair stepping to the upside, and we're starting to get those bullish divergences that I mentioned, which could potentially, keep us going. And so, if we look at the little structure that's being printed here, it's not really a triangle per se. It's more of a kind of just a kind of janky, broadening descending wedge. Uh, again, like patterns are arbitrary, guys. Okay, they're really arbitrary. But if we do have a breakout on this kind of structure, then what I would be looking to happen is for us to flip this level. And so now you can see why I'm showing you these levels, right? Because what we would do is we would pop out here, right? Maybe we could come up here, or maybe, we just humbly just flip this thing, maybe even scare people just a little bit, and then kind of chop it out, sort of like what we did here, but in the opposite. And then at some point, just grab this area. Now immediately you should be able to identify a little bit of a pattern that might end up being carved out there, right? Maybe something like this, right? Some type of inverted head and shoulders, might be put in, something like this. Now that would have a measured move that took us over this area. Okay, so if we do end up putting in this kind of head and shoulders pattern, I would expect that it doesn't have to be right away. This thing can kind of try to hoodwink us, try to bamboozle us, just trick us. And but eventually I would expect that kind of measured move to play in. We essentially flip the top of this, and then we continue to be bullish. And guys, I've just been incredibly bullish on this channel ever since we flipped essentially 16,500. I entered the market again after 15,500. You guys know that's documented on this channel, and I just have not been bearish since. And I do believe that we do have the possibility to get up to 32K, maybe 35K, 42K, and maybe even in an ambitious mode around 50K. But it just depends on a lot of factors right now. The market is incredibly complex. And so I'm not going to be bearish unless we really lose this zone here, okay? I'm not going to be bearish until we lose this zone. And right now, I like what I'm seeing. I like that we grabbed the liquidity here. I like that we're building structure here. And now I just think it's time for us to start building some type of a launching pad. Otherwise, this pattern is most likely going to fail. And what I don't want to see is us just come up here and get rejected at this kind of area around 30,500. I want to see us flip that $30,500 area. The more aggressively, the better. But if we're sitting above that kind of 30,000 pretty solidly, whereas previously we were only able to get a wick up there, if we're able to sit above there pretty aggressively and put in some pretty solid candles, I don't even care if we just go sideways, okay? Then I'm going to say that, yeah, it looks like we're starting to sit at the bottom, right? At the bottom of the top of the previous bull market. Okay. And so for me, I mean, other people can define it however they want. Okay. Like everyone has their own kind of, pretensions, their own kind of, theory of the market. But for me, we're going to be sitting at the bottom of the top of the previous bull market. And so that's going to suggest to me that we're in another bull market. And it's essentially going to be confirmed. And even if it's a mini bull market and we only get to like 42 or we only get to 35, okay, or maybe we only get to 50 and then we come back down, okay, this will still have been confirmed as some type of, a mid-cycle rally, a mid-cycle bull, and then we can probably expect some type of a pullback with the chaos in June or any type of shenanigans that could happen in the financial markets, with the banks or whatnot, probably from June all the way to the end of the year. There's just so many ways that we could be tripped up. Earnings are less than expected in a recession, okay? Banks are collapsing, okay? The Federal Reserve or the Treasury ran out of money because they didn't move the debt ceiling limit up in time, okay? Basically Congress doesn't pay its bills, right? That kind of stuff. These type of narratives can really shake us down, and then all of these stop losses that we've built up to the upside here, they may end up being taken out in some type of scary move to the downside. Perhaps double bottoming, perhaps taking out our low, right? Maybe taking out some of the stop losses down here, or maybe Bitcoin is just seen as something like gold, where people have to have it, and so maybe we're not able to breach 20,000, 25,000. We got a lot of support over here, okay? Got a lot of support in this area that we've been building up. And anyways, we could make another platform down here, all right, assuming that we don't break down below 20,000, where we're much weaker, okay? We're much weaker below 20 to 18,000, okay? Under that, we could just dump like crazy. But assuming that we hang on above that, then we have a lot of structure that we've been building up over all these months, and we could maybe create an accumulation wedge and then continue to go from there after. And it doesn't matter how high we go, we come back down here, take out all this liquidity, and then maybe even just very slowly for a year. It could be a year, okay, that we just go sideways and then slowly accumulate. And that's going to be the real structure. This is going to end up being the base, right? The base that the next bull market is going to build upon, that's going to take us to, you know, 90,000, 105,000, 120,000, okay? And it's going to take time. It's going to take a lot of time, and a lot of people are going to get bored and sick of this market. But yeah, that's a possibility, okay? So guys, this is what I'm seeing in the market coming up, but I just have to warn you that we are going to have the likelihood of that strong pullback, anytime essentially after May. So, not financial advice, but for me personally, I'll be looking to take the majority of my profits in May and then just play it by ear from there. But I am going to continue to be bullish this month unless we lose this structure that we're kind of building up. And I think you can see it, okay? Like just think of this chunk. Think of this chunk. Just ignore this. Think of this chunk, okay? We're stair stepping to the upside, and I want to see us do it again, okay? That's going to give me It's going to give me my hopium, right? It's going to give me my hopium injection, guys. Okay, so let's go ahead and just, remove the triangle here because I think you guys understand that and why I want to flip this level so much and why I keep looking for like cups and handles and inverted head and shoulders that I'm projecting to the upside because I'm very excited about flipping this area and doing the next stair step. Let's see here. Let's go ahead and just see how we're doing on the Bollinger Bands midline on the daily. And you can see on the daily, we are over the midline as well. So we continue to be supported by this very supportive band that kind of shows us that we're kind of in the bullish side of things, but we're very close to the midline, right? That suggests that we have room to expand above it, okay? And if we're below it, very tight to the midline, it suggests we have room to expand below it, but we have room to expand above it right now. So as long as we're holding above that, it's actually a very interesting thing. Now, what I don't like is that it's pointed down. You can see that when it gets pointed down, we can be on the edge of it and just slip under. So I would like to see a little bit of a pop here. Let's go ahead and go to the 5-day. You can see on the 5-day, we're well above it. So could we get a little bit of a pullback? Well, this Bollinger Band midline, tends to act as a little bit of a center point of gravity. And so I wouldn't be surprised if before I get my little area that I'm trying to build up, if we do get another pullback, at least to the midline, maybe even a little scare, which again would be around that 25,000. And then we're able to kind of refresh and go. But that doesn't have to happen right now. Okay, that doesn't have to happen right now. You can see that in the past, we've kind of made this kind of like top of a heart kind of structure, and it is possible that we just make a bigger top of the heart kind of structure before we end up coming back down and essentially be the same price that we are now, assuming that this band just ends up kind of curling over and maybe we top out at 35 or something like that, okay? And so just be open-minded to this. You can see that the size of these things before they touch back to the midline, right? Like they have all sorts of different sizes, so you really can't just plan on, oh, I'm overextended, or oh, we haven't touched it in a while. It just eventually we come back to it. And so being aware of where that midline is, which currently it's around 26,000, 25, 26,000-ish, then, just being aware of where it is does suggest where we could touch back to. And occasionally we just poke through it a bit. And so just giving it a little bit of buffer room to adjust your expectations, that's really important as well. So guys, if you see this kind of like squiggly line going through my chart from time to time, that's just the Bollinger Bands midline. Of course, for volatility, I use the Bollinger Bands width percentile, and so that's just a mathematical formulation of how big and how small the Bollinger Bands are. So normally when you look at Bollinger Bands, you see this kind of like a weird outline around them, right? And like squeezes and stuff. I just ignore that because I use a totally different way to measure volatility. But the midline, I still love the midline. Guys, let's go ahead and just recognize that we're bullishly above the Bollinger Bands midline right now, and so again, like I can't be that bearish. Okay, we haven't like broken down from them or anything. We haven't been rejected from them or anything. If anything, we've proven that we can use it as support. And the next time we hit it, I would expect that we would use it as support also, unless we end up flipping it. And if we flip it, then of course I can change my attitude. But on the 5-day here, which is one of the higher time frames that I use quite regularly, we're looking pretty good. And then on the weekly, you can see that we're extremely bullish, and that wick all the way down. Look at that perfect tag on the Bollinger Bands midline there. Okay, so it just kind of reminds me of this thing over here. You see what I'm saying? And then, a lot of people are making an analogy of this top right here as being equivalent to this top right here. We do have some signals that indicate that that could be the case. And so a lot of people are looking for some type of traumatic dump to come up within the next couple weeks that could take us all the way back down to the start. And again, like that's a very real possibility. But until we cross the midline on the Bollinger Bands there, I just don't think that it's very realistic. And so holding on again to that $25,000 area is just going to show us our strength, right? Our strength in this zone. And then we have kind of a backup, right? We have a backup in that kind of like 20K-ish area. And then losing that, we just don't know how low we could get because this is just up and down over here. And in the past, it's just very shaky. Okay, so we could get quite low should we break those kind of insurance policy areas. So guys, I am giving you a little bit of macro today. Not even sure what the day is exactly for. I think it's like Thursday actually, so not really much of a macro Monday so much as a macro Thursday. I'm giving you a little bit of macro today just to give you that kind of bullish perspective because I think we've been a little bit over bearish in the markets. I think everyone keeps talking about an apocalypse, a banking apocalypse. Everything's going to collapse. And, maybe that could happen. Maybe it could not, maybe it could not happen. And maybe they're just over exaggerating and we get through it. Okay. You can focus on the negative so much that you miss the opportunities in the market. And currently, we're doing what we need to do to continue to be bullish. We haven't broken down yet. And so let's go ahead and just go over to the 6-hour to start looking at some levels at which we might end up breaking down. And let's see here. For the 6-hour, sorry about that. For the 6-hour, you can see that we were rejected today at the bullish control zone on our first attempt to push through it. The 6-hour does have the bearish control zone at 27,932. The bulls will be in control above 29,576. And our neutral point of control is essentially what we fired off of, which is down here at 28,779. So, the bulls just didn't want to give up the neutral point of control on this 6-hour chart. They held it strongly in the last couple days. and just ended up flipping the momentum pool into a launch pad with the volatility pivot at their back at 28,734. And so for me, guys, I'm going to continue to be bullish on the 6-hour chart as long as we're above essentially 29,000. That's the same number that I gave you in the last episode where I said above 29,000, I'm going to be flipping bullish on those shorter time frames. And so I hope you guys took that seriously, because look at this pop that we got on the chart here. That was a almost 2.5% move. And again, like on leverage, that could be very considerable. And, perhaps there's some coins doing better than Bitcoin right now. I think the majority of the market is in Bitcoin. But, again, for you leverage traders, that's going to be a huge move. So when I said 29,000 in the last episode, again, like I was being pretty serious, right? Guys, you gotta respect the alpha momentum pools. They are just continuing to get it right, and as long as we respect them, then of course you are going to continue to kill it. But we did get limited by the bullish control zone, so that does suggest that we just have a little bit more work to do. Have to put in a little bit more of a kind of supportive structure down here if we want that chance to break through there. And of course, I showed you what was limiting us. It's this diagonal. And so if we do come down, if we do recheck the bottom of this because we get rejected once again, rejected, 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 rejected. If we get rejected once again, we may have to check the bottom of this triangle. And that's where you can see that we would be in danger of getting into the bearish control zone. And so, losing this area down here is why I would suggest that we could come back to our range lows, or even have the potential to spill down and lose those critical, Bollinger Bands and whatnot, guys. So that's my assessment here. And again, you can really clearly understand why I want to get out of this, have some type of measured move on an inverted head and shoulders, flip this area, and then go, because otherwise we could be looking at something kind of disastrous, right? Let's see here. I think that's pretty much all you really need to know. We need to flip that 29,576 area up here, get on top of this diagonal, and then get on top of that 30,000, just call it like 400, 30,500, and just put some, candle bodies up there, or do something up there, okay? But let's go ahead and put on the daily. And the daily is interesting in that its zone is even skinnier than the 6-hour, and that doesn't usually happen. So there is a little bit of a concentration going on here. For the daily, it's a much more clear picture, okay? If you look at my support and resistance boxes behind us, you can see that the daily is actually lining up quite well. This was not planned, but this does show that my method is working, because the bearish control zone on the RSI is going to line up exactly with the bottom of support here at 26,569. So again, losing 26,500, it's going to suggest perhaps some dark days in the future for Bitcoin temporarily. And again, flipping 30,500 is going to suggest that the day gets back into the bullish control zone, and perhaps a bright future in the coming days. Until then, you can see that we are above the neutral point of control on the daily, above 28,610. And we are also above the momentum pool currently, as well as above that critical level, the daily volatility pivot, which is currently at 28,945. Now, holding this level is going to be probably key to all of this, because that's going to determine whether we end up breaking down or whether we end up flipping this area. So really, 28,945, super important. And then just defending the bottom of these candles here at 28,857, that's going to be also an indicator, right? Because we lose the bottom of those two candles, then probably we're going to continue to the downside and lose the neutral point of control. But so far, we're doing what we need to do, and we're just applying pressure, applying pressure, applying pressure on this supply line that just keeps smacking us down. and hopefully we're going to pop through it this time. Third time's a charm maybe. So let's go. It's time. It's do or die time. Let's go ahead and just move over to the 5-day. The 5-day will be closing tomorrow. And so for the 5-day, it is one of those kind of charts that just gives us a good idea of how the weekly might end up going without having to wait for the weekly close, right? And so for the 5-day, you can see that we do have the volatility pivot at our head. And again, like this wasn't planned with my support and resistance. I use a totally different method to calculate these things, but the 5-day volatility pivot is at 30,548. So yeah, I don't know if we're going to be able to get that in the next 20 hours. And so that could suggest that, again, if we just pop up and get rejected, it's not going to be the best look, especially if we re-enter this triangle. But if we pop up, get rejected, hold the top of that triangle, and then build in a little structure and kind of flip that area, then that could be okay, on by the weekly. But and maybe it just takes a little bit extra time, okay? Because 5 days is a lot of time, right? So maybe it just takes more time into May. But I really want to see us start popping because we have kind of a deadline, right? Like June to October is typically not the best months for markets. So we just want to kind of get whatever we can squeeze out of May as soon as possible. And yeah, so it's suggesting we need to really conquer that 30,550. It's giving us a little bit more ambitious line there. And then the general continuation, what we'd like to hold there is 29,531. So let's say that we're not able to get up to that 30,550. Then at least we could do is flip our MACD bullish, and that would happen above 29,530. And then we would still have, the bullish control zone as long as we're above 28,645. So even if we just get a little bit rejected in this triangle, but we don't break all the way down to the bottom, on the 5-day, we're technically going to still be in the bullish control zone and still have the potential to make a second go or maybe even a third go on this to break out of this little formation. And the 5 days suggesting that nothing really too terrible happens unless we break down below 24,977. So again, let's just say that we do something like this, just kind of wick down, use this area as support, and then basically that kind of Bollinger Bands tap, right? Tap that Bollinger Band midline, and then start to build our structure again. Then again, like nothing traumatic really happens unless we lose this neutral point of control, which is currently around 25,000. So that's your 5-day outlook for you guys, and you can understand where these key levels are that you might be looking for. Of course, the momentum pool is between this 29 250 and 28, you know, uh, 880 essentially. So if we just meander a bit in that zone, it's just going to be ambiguous. We're just not really 100% sure what the chart's doing. And again, we don't lose the bullish control zone on the 5-day until we're under 28, 645. So guys, those are your outlooks for the 6-hour, the 5-day, and then also the daily, of course, as well as a little bit of the macro that I did put in front of you. Let's see what else do I have here. No, I think we're pretty good on that. One thing I'd like to do is just go over our EMAs really quickly. We can start with the 1 hour. See what we have going on here on an EMA basis. Going to use the advanced EMAs. Not to scare you guys, but I do like to see what's going on. let's see, on the 1 hour, you can see we're pretty free and clear of almost every EMA, and we are just building a little bit of structure up here above the 9 and the 4, so this looks very bullish. We don't have anything overhead that's just going to slap us down on the 1 hour. So the 1 hour, you know, the main thing on the 1 hour is this wick. That's a very nasty kind of wick that suggests that there was a lot of sell pressure at 29,500. Okay, so previously we had that sell pressure up here at 29,950, but it's come down to 29,550. So that the bears are starting to slap us down earlier and earlier, and really we would want to try to overcome that. But this wick right here automatically tells me that maybe we're going to get a deeper pullback here, even if this is a bullish position on the EMAs right now. It could be something like this that ends up dipping us back down, and we make another attempt, and maybe we just use the support of all these other EMAs or the 200 over here as a launch for a second try, perhaps. Okay, so the 1 hour, it looks good right now, but again, combined with that wick, it's just a little bit sketchy. Let's go ahead and go over to the 6 hour. The 6 hour does have that kind of price action here, which I do like. Okay, I like this type of price action where we have these higher lows and then we pushed up above the neckline, and I just want to see us make another effort to flip that neckline, and then we essentially have an inverted cup and handle here. Now that doesn't always work out because it's not valid until you actually flip that that neckline there, and currently we're underneath the neckline. So also for the 6 hour here, it does suggest that we could end up coming back and just relying on this structure of all these EMAs. We have the 200 simple moving average that could give us some pretty strong support, as it's been doing in the past here. Okay, it could give us some support somewhere around 28 to, just get a little bit of a wick. You see this little wick on all of these drops here, down to maybe 28,300. And then the 200 EMA has been a very tough nut to crack. So 27,8, 40-ish would probably be a bottom on that one on an EMA's basis. If we do look at the daily, I mean, again, they all look very bullishly oriented. They don't have any EMAs, over them, pushing them down. And so on an EMA's basis, they're all free and clear to go. And it's really just the price action that is holding us back right now, okay? Probably the past price action from the previous market where there's just a lot of sell orders in this area. And the sellers are just outweighing the buyers right now. But on an EMA basis, there's no reason why we couldn't continue to pump. So I don't see anything, limiting us on the daily either. We are above the 21, the 9, and the 4 here, bullish, bullish, bullish. And were we to pull back deeper, we do have this 800 EMA at the 27. 650 over here as kind of a backup support, and we have been using that 800 EMA as support in this area and this area, so I would expect it to hold again. Plus we have the 50 coming up here, which supported us here and here, and so that's going to be coming in somewhere around 28,000. So on a daily basis, I also see support below us, and again, we're free and clear above us should these EMAs want to push. On the 5-day, it's a little bit more of a nuanced story here. You can see that we do have that 200 SMA still above our head, around $32,000 to $33,000. And so, if we do end up pumping, I would suggest that, that 32 to 33 is our first kind of limit that we might experience. before getting a perhaps smackdown. And so again, I just wouldn't be overly bullish. I would just have a modest expectation that if we do break this area, if we do flip that kind of zone that we've been talking about, that we really just target 32.5, 33,000, just modestly for that first move, just on an EMAs basis. And then let's go ahead and take a look at the weekly. And for the weekly, it's a very similar picture. Again, like all of these timeframes are extremely bullish. They're all above the EMAs they need to be above in order to continue pushing. It's just price action that's limiting us. It's just the fact that buyers aren't stepping up. Okay, that's it. There's nothing else really limiting us until 32 to 30 $30,000. And here on the weekly, you can see that we have the 89s, the 100, SMA basically above our head, and so that's creating a little zone around that. Again, 32.5 to basically 33,300 here, which would be a normal limit, a normal kind of limiting area if we were able to pop up, and then we would expect a little bit of a retracement or some type of struggle there that could end up just popping us back down. Flipping that, of course, we could be incredibly bullish. Like I said, holding this area would be incredibly bullish. But guys, I think I am going to end it there. Let's go ahead and just go to the daily chart just briefly, just to double check where our volatility is. And let's see, we continue to push. We continue to push in this area down. So we are still contracting. And if we look at this chart, take off those EMAs, we've been contracting to the upside essentially because this candle is, based here. It does have a massive wick all the way up to 30,000. If I move this aside, you can see that wick has a huge, huge area. But we did have a volatility flip here where essentially we were expanding to the downside and now we're contracting to the upside, and that contraction is not done yet. So it does suggest that we could have a little bit more push in us, assuming that this doesn't just suddenly curl up, but it does suggest that we could have a little bit more push in us. Let's go ahead to the 6 hour, and the 6 hour is having a volatility flip, so that's not really going to help us. See, the 1 hour is pushing up. Since about here. Yeah, that does suggest that maybe we do have more of a little bit of a pump in it. Let's see, this was the breakdown. Yeah, we were contracting to the downside and then pushing to the upside. So you can see it's making a noble effort right now, but it does suggest that volatility wants to, at least in the short run, take another attempt at the highs here, at the local highs on the 1 hour. Let's go to the 5-day. See what the 5-day is saying. A little cross here, and a cross here. See expansion and contraction. So on the 5-day, our volatility was expanding us to the upside, and now we're having some type of a contraction. Maybe this just suggests sideways. Well, this could also be sideways. Contraction to the upside, expansion sideways. Yeah, this is very difficult to read. So I think just in the short term, maybe we continue to attempt to push, but we do have a little bit of, if I was just to read this normally, I would think that this push up was a corrective move, but then this sideways push was an expansive move, and I would just suggest that we just have a little bit of sideways action going on once again. But as you can see, we can push up in a sideways, contraction. It's just it's usually not the definitive choice of our direction. So if we are just contracting on this bigger time frame, and we do have a little bit of a push, it just doesn't tell us really much about where we might be headed. Okay, it just would suggest that we're just kind of leaning up while going sideways. See if the weekly says anything different than the 5-day. Yeah, the weekly gives us a little bit more room to play with. We are getting a cross here. Ah, this is so difficult to interpret. Let's see, just contracting. Is this going to be expansion or is this going to be contraction? Just really hard to say. The week's not over yet. I have to wait for the week to conclude. But what we can say is that we've had expansion all the way since November 2022. Okay, and so for all these months, we've just been expanding in our price action, and ever since essentially February, we've begun to contract. Okay, so let's just zoom out on the pricing here, just get some perspective. That would suggest that ever since here, we've just been contracting, and so this whole move from the weekly perspective is just consolidation, for whatever's coming up next. This was the expansive move, and this is the contraction on volatility. So, is it going to come back down to the same level because it was just, kind of consolidation, right? Perhaps if it does continue to push down, but it's also suggesting that there's going to be another expansive phase pretty soon, okay, sooner than later. And that could either take us, straight up because this consolidation has been basically vertical itself. So if we do end up expanding to the upside, if the consolidation is almost vertical, then the expansion to the upside would be, it could be parabolic. But on the other hand, if the expansion ends up being to the downside, then it could just bring us back down to our lows, or again, some of those areas like 20,000. So I'm just trying to read the tea leaves here. This isn't an exact science, guys. Just trying to give you a perspective on what's going on from the tiny time frames to the higher time frames. This was a longer episode. I do appreciate you staying with me, and I'm going to wrap it up there. Guys, that was your alpha for the day. Stay safe and happy trading.